Now, let's be honest here, the housing markets around Australia were pretty quiet over the past week, especially with the Australia Day long weekend. But the limited stock on the market, it sold reasonably well. Nationally, 514 auctions and a clearance rate just a tick over 62%. In Sydney, it was really quiet, just 54 auctions, almost no interest at all. The clearance rate was under 54%, you can see there. In Melbourne, it was better, 150 auctions, the strong clearance rate above 73%. So clearly some Melburnians stayed at home over the long weekend. In Brisbane, 74 auctions, the clearance rate here above 62%, so the national average. In Adelaide, 65 auctions and 69% of those sold. In Canberra, there were just 9 auctions, 6 of those were sold. And in WA, no real auctions to speak of, but there were 443 private sales, and that continues WA's healthy trend as well. So let's bring in here Cameron Kusher, the Executive Manager of Economic Research at REA Group. Cam, always good to chat to you. I just want to go to this whole issue about negative gearing. Now, people are now quizzing the Treasurer about whether there's any changes likely to negative gearing, whether there's any tweaks around the place in the wake of obviously the about turn on tax cuts. So just explain to me, if there were tweaks to negative gearing rules in Australia, would it add to housing supply or take away from housing supply?
Well, I think if we were to change negative gearing rules, Ross, that you would probably see less of an incentive for individual investors to purchase residential property. The idea behind negative gearing is if you're making a loss, you can carry over that loss, and it's a similar theory to running a business or anything like that. So if there were tweaks to negative gearing rules, I think you would see fewer individual investors. I guess any government doing that would hope that institutional investors step up into that place, but whether or not that would actually happen remains to be seen. We know there's still a lot of challenges around build to rent. And, you know, no one's really out there buying, in terms of institutions, a lot of rental properties and making them available for rental. So I think it would, especially right now. Sorry.
I was going to say that the one thing we do know is if we go back in history, Paul Keating famously tried to change negative gearing rules. That lasted about 6 months before the supply of housing. There was a crisis in the housing market. We know, of course, politically that when Bill Shorten tried to change those rules ahead of the election, he lost an election that otherwise might have been won. So this is a reason why you get a sense that any government is going to be very sensitive, and especially one that's got such an ambitious target on the number of new homes to be built in Australia over the next 5 years or so.
Yeah, it's exactly right. And as you said, you know, Bill Shorten losing that election is not ancient history. It only happened a couple of elections ago. So whilst Anthony Albanese didn't rule out changes to negative gearing, I think they'll be very cautious about doing that, particularly at a time like now where the rental market is the tightest we've ever seen. We've seen record low rental vacancy rates. We're seeing record low levels of supply of rental stock. We've seen rents increase by about 33% over the last 3 years. The last thing you want to do at the moment is make it tougher on renters. Now, obviously, people that don't own a property or don't own an investment property look at these negative gearing benefits and say, well, why are we preferencing investors? But ultimately, it's because historically, big businesses or big corporations haven't wanted to invest in rental stock. And the social housing stock of rental properties has dwindled so much over the last 30 or 40 years. So if you don't get those individuals providing rental stock, who's going to provide it?
That's so true. And that only makes the rental crisis worse, as you say. But there would be many Australian families right now coming up for rental reviews. Quite often they are at the beginning of the year. What's your own sense on how those reviews have gone? Are there some markets clearly tighter for rents than others at the moment?
There definitely is. If we look at the 5 major capital cities, so Sydney, Brisbane, Melbourne, Adelaide and Perth, each of those cities have seen double-digit rent increases over the last 12 months. Interestingly, most of them, the rate of rental growth is actually slower in 2023 than it was in 2022. But at the same time, in most of those capital cities, we're seeing the number of properties available for rent at pretty much historic low levels. So in terms of rent renewals, I think in most of those capital cities, people are going to be facing double-digit increases in rents when they do come up for renewal. And of course, that's making it harder for people to find the money to pay rent. It's making it harder for those people that aspire to own a home to save a deposit to get into home ownership. And unfortunately as well, there's no meaningfully large increase in supply on the horizon. So the rental market looks set to remain challenging for some time.
But the one thing we always know is that if the rental market is challenging, that ends up forcing up capital prices. So in other words, prices become less affordable based on pure supply and demand. And it doesn't appear at this stage, as you and I have talked about before, with the problems in the construction industry, that there's any significant increase in supply coming anytime soon.
No, that's right. I mean, as you say, we've had material prices rise by about 33% since the beginning of the pandemic. Labour supply is short because there's already quite a lot of housing under construction. There's a lot of major infrastructure projects going on, which is drawing workers away from housing. And then equally, you've got the highest interest rates in 12 years as well. So finding the people to buy these properties, finding the finance to go ahead and start new projects is a very big challenge at the moment as well. So we need more supply. I think we all agree we desperately need more housing supply. Actually making that happen is a real challenge under these circumstances.
REA Group's Cameron Kusher. Always good to have you on the program, Cameron, and always great to have a chat to you about these things. We'll see how it goes over the next few months or so.
Thanks, Ross.